Good morning, everyone, and welcome to the European crossover webinar. And we have seen the euro, well, it came off of its lows yesterday and actually made a move above 1020, which is a bit of a surprise. But we have seen it pare back a bit, and yet we're still holding above 1020. And the dollar index has eased back a bit from the 98.41 area here, which has been like a bit of a minor support. Minor, not support, but a minor resistance here with the cash dollar index. We'll take a little bit closer look in here. So we've just been hanging around that 98.41 all week long, have not been able to push beyond that. And it's been minor resistance. It's held, but the key was that if we got above 98.65, that'd be on a daily close would be just a full-on buy signal on the cash dollar index. So we've eased back, but our support has remained the same throughout the week, which is 98.11. That was a resistance on the way up, and that's held. The only difference will be today is if we get beyond that and we end up coming back to test the area that we got back above, which was the 97.89. That's going to be the key, whether or not we see euro trying to make a move a little bit higher, press. Taking a look at the dollar CAD, we've had 32.69 all week also, and that's actually kept this market in check. I think yesterday it may have taken it out by 2 pips maybe. And then we've since pared back a bit. So we'll see how that fares. We also saw the peso finally come back a little bit here. If you look at it on a daily, we'll just take a quick look. The last couple of days on this run-up have looked rather suspect, so it's not a surprise we've pared back. So despite pretty good, strong little rally here, we certainly finished towards the lows of each of these two prior sessions here. And most notably was the dollar yen. The dollar yen actually came within absolutely a whisker. Basically, you could say that it did reach the 78% on this pullback. 78% came in at 822. We just about got there, and that coincided at the time with U.S. yields. We actually, if you look on the 30-year bond, made up as high as 830, and that was after we were at 807 early in the session. So that allowed that dollar yen to go on and continue to pare back. And I noted in the room that watch out. I mean, because I was actually offering at 831. I actually didn't even see 830. I thought I only saw the high of 828, but apparently it did make it to 830. There was good volume at 828, 30, and 31, as well as 159 even. So I did go on and right when we got up to that area, this is about the same time right when the dollar yen was making its lows, and we think the low was 826 and the 78% I believe was 822. So it came very, very close, just about right there. We've since come back, and we'll take a look at the analysis in a little bit. Gold made it up to the 38%. Mentioned that in the room. It actually hung around for a little while. I even made another stab, and I missed this move up here because I'd taken a quick scalp short in a second one. But I actually missed the second move. I was looking so much at equities, so close at equities, that I missed this dip here. We had a dip in equities, and then that actually took the gold above the 38% by just about 50 cents or so, maybe 80 cents. And then from there, we continue to move lower as equities recovered rather nicely. New all-time highs in S&Ps. here once again, and we've seen the bund continue to move back higher here. And crude oil just being a little bit quiet, but like I said, the old adage, don't sell crude on a Friday. I did last Friday and took a little bit of a sting on that. And we're trading real quiet. As I mentioned previously, I don't think it knows what it was doing here. I think it was yesterday, Thursday, I believe it was, or was it Wednesday when it was up here above this 57. I think it was Thursday, and finally we came back in on Thursday morning, and we haven't been able to really recover. We just kind of hung around this area here. We'll see what happens, but it's no longer responding on the upside to moves in equities. We'll take a look and let me see what economic news we have for today's calendar. Coming in today at the top of this next hour, we do have Italian consumer prices. That's a final readout. And final HICP in the Eurozone. Coming into the States, we have New York Fed manufacturing at 8:30, as well as import-export prices and retail sales. That'll be at 8:30 Eastern. That'll be a mover here. And let's see. Industrial production at 9:15 of capacity utilization. And business inventories at 10 a.m. With the exception of retail sales, not any real significance. With that, we're going to move into the news. I guess we'll start out with the Aussie dollar. So the Aussie dollar loses out as the New Zealand dollar gets a yield advantage. The Australian dollar was heading for heavy weekly losses on Friday as rate cut risks returned with a vengeance, while its New Zealand neighbor went the other way after a policy easing was ruled out for at least a couple of months. The Aussie dollar was pinned at 67.96, having lost 9/10 for the week, and left behind its recent 3-month top of 69.30. The Kiwi, in contrast, was up almost 1% for the week at 63.89, having found strong support around 63.20 and with yields moving in its favor. The Aussie dollar has already been undermined by concerns over the Sino-US trade talks and ongoing unrest in Hong Kong, so it's vulnerable when the local jobs data this week showed a surprise 19,000 drop in October. That was the biggest fall in 3 years and nudged unemployment back up to 5.3% and further away from the RBA's ultimate goal of 4.5%. Investors reacted by narrowing the odds on another quarter-point increase, cut in interest rates to 5.5% through a move in December. A probability rise to 68% for February. The RBA does not hold a policy meeting in January, and to almost 100% by June. This should see the Aussie dollar remain an underperformer in the near term, including against the week's star, the Kiwi, Westpac FX strategist Sean Callow said. For the week so far, the Aussie was down a hefty 1.8%, while the Kiwi was at 1.0639. U.S.-China trade talks seem some way for resolution. Remember, the initial date for an agreement was supposed to be this weekend, and Hong Kong turmoil is raising risk premiums in Asia. He saw the Aussie trending towards 67.50 with any rallies likely to struggle with the 100-day moving average. The outlook for the Kiwi was a lot brighter given the bears had been badly burned by the RBNZ's decision to skip a rate cut. Callow looked for a rise to 64.65 near term and a much larger rally should that resistance break. And fresh trade deal hopes gently lift the dollar and the Aussie. The dollar and riskier trade-exposed currencies found some support on Friday as fresh hopes for a breakthrough in Sino-US trade talks were tempered with caution. White House economic advisor Larry Kudlow said late on Thursday that the two parties were getting close to a deal and the mood music is pretty good. He offered no new details, as usual, but the sentiment was enough to reverse a little of the safe haven Japanese yen overnight gain and to buoy Australian and New Zealand dollars. Australian dollar, which had tumbled on Thursday after an unexpected rise in the national employment rate, added 0.2 to 67.95. The New Zealand dollar rose 0.1 to 63.88. Against a basket of major currencies, the greenback was steady at 98.14 as caution and the lack of concrete news in Kudlow's remarks kept a lid on risk appetite. It may not be a game changer, said Terence Wu, as Treasury strategist. Thus, we think any reversal in the risk-off trades may not see a good shelf life. Mixed signals on trade negotiations have abandoned in recent days, while evidence of the damage the dispute is wreaking on global economy has mounted. The next scheduled economic updates are Eurozone trade and inflation data. On Thursday, China's Commerce Ministry said the two countries are holding in-depth discussions, while President Trump said on Tuesday a deal was close. But the Financial Times, citing identified people close to talks, said an agreement may not be reached in time to avoid a new round of U.S. tariffs. I'd go with that. Now, that's probably reality as opposed to this BS that a China trade is just around the deal, around the corner. Now, that's some real news. It implies some real truth on this thing, and not the ridiculous news is around, deal is around the corner. We've been hearing deal is around the corner. Like I said, the boy cried wolf, and at least you got to say equity markets keep biting on that. On Thursday, China's Commerce Ministry said the two countries are holding in-depth discussions, and it said, as I was saying, is that it may not be reached in time, the deal, before the new round of tariffs take place, and that's on December 15th. Subpar growth on figures from China and Japan, followed by lackluster updates in Britain and Europe, underline the potential downside if a trade deal falters. Until we've got the word from Trump, no one is really willing to get in front, said Jason Wong. And sterling touched a 6-month high against the euro and gained on the dollar, and expectations that the Britain's ruling Conservative Party might win a majority on the December 12th election. So with that, we'll move into the analysis. So the euro rose from the bias chart support of the last 2 days, which was 9.94, to close above 10.20. Resistance for Friday is at 10.47, and support remains 9.94. So let's go on. So we've moved up the resistance to 10.47 from 10.40, but other than that, there's no real change. I mean, like I said, this has probably been the tightest week as far as a range than I can ever remember that was not holiday induced. I mean, you're coming into Thanksgiving or coming into Christmas. I've never seen a week with this tight of a range here. I mean, it's just absolutely unbelievable. I mean, if you look at this, was this Monday here? So that's 43, and that's 98. So was it less than 50 pips for an entire week? It's unbelievable. 0.990, so just at 53 pips for the entire week's move so far. Let's go move into the cable. And I put on here, the cable has not changed in its analysis. I mean, the support is going to be 28.07. And the upper side here on the cable is going to be 28.90. And same thing here. Look at this range in cable. I mean, it's just unbelievable. I mean, honestly, I mean, to me, if you're trading cable or euro in the futures market, I think you shouldn't even be, the margin should only be like about $300. Seriously, I mean, there's no movement. I mean, it's almost like as if you're trading T-bills. That's how the lack of movement we're seeing here. Let's go and move into the Australian dollar. So it says the Aussie sunk to new lows, tagging 67.70, which is a 61% of the move of 66.70 to 66.20, 69.29. Opening a likely move to 67.08. Support will be 67.50 with resistance at 68.52. So let's go on. So support's going to be 67.50. And resistance at 68.52. And these markets are just so quiet. Just even the 68.52 seems a bit of a stretch all the way up here, but we're certainly pressing against these lows here. As I mentioned, 67.50. And as I mentioned, with this move down here, there's a potential, not necessarily today, but potential to go and move down here to 67.08. We'll go and move into the Kiwi. Kiwi paired back after the recent gain to 64.17. Resistance is 63.89 with support at 63.32. And we're just below this key 63.89 area here. Right there. See that? And really, we'll see. I mean, they've gotten just a couple of pips above it this morning or in this session, but it's going to be 63.89. And with resistance at support at 63.32. And with that, let's go move into the dollar CAD. The dollar CAD's bias chart resistance level of 32.69 continues to keep the market in check. Support remains 31.98. So, as I mentioned, that 32.69, we did take it out yesterday by what looks to appear to be 2 pips, and that's been holding up really well. That's been that 32.69 has been the bias chart resistance all week long. After we saw Friday's move, and we got above, remember, which was 32.12, the 50% of the move, opened up the potential for a move to 33.09. And I think the market petered out on, I think it was around 32.36, around there on last Friday. So it opened up the door for a move to potentially to 33.09. That's what we're looking for. But we're looking for a pause at 32.69, and that's kept this market in check all week long. So 32.69 holds steady, and 31.98. Let's go into the dollar peso. So the dollar peso has two suspect rallies over the last 2 days. Bears will come in at 1938 and 43. Support is the prior breakout level, which is 1923.6. And we've already made a bit of a move down here to that area here. Low so far yet has been 1925.9. So essentially 1923.6. So our support is 1923.6. That's that big pivot breakout level we've been talking about. So put that for support. And resistance will be the 1938. And with that, let's move into dollar yen. Dollar yen continued further erosion, coming within 3 pips of the 78% pullback. We mentioned that earlier, which is 78, which was 822. Resistance is 860 with support on a break to 806. We're actually above the 860. We're at 806 right now, 866 at the moment. So just above that, and you can see a level support come in right there, plain as day, 876. Well, I don't know if it would make it up to 876. It may. We did reach all-time highs with equities, at least on the SPOOs. We had 866. Well, we'll give it the benefit of the doubt. So that's a bit of a stretch to me. Although it did hit the 78%. At 822, equities remain all-time high. So yeah, we'll go with 876. That's a level, and we'll just go with the levels, playing the technicals. Nice rebound off of that low, but then again, once again, it got to the 78%. So it's going to be 876. And support if we were to break lower, but right now with equities turning around, doesn't appear likely to be the case. We will go with 828. And let's go and move into the cash dollar index. The dollar index minor resistance of 98.41 has stymied a further rally. Initial support remains 98.11, but the key will be the weekly level of 97.89. And that's if we do go in and break lower. But for right now, we're going to keep that 98.11 as our bias chart support. And the upside minor resistance is 98.41, but the key would be 98.65. So we'll keep things in check on that. And with that, we're going to move into the cross rates. Well, we're smack dab in the middle. I mean, day before yesterday, you can see we made a little run up in here. That was on the backdrop of this whole RBNZ stuff, and then we gave a good portion of that back, and now we're just almost actually a little bit lower than the middle of the range, but we're staying relatively quiet. So there's just no changes here in the QEN. You can see the 69.80. That's our resistance, and our support's going to be 69 cents even, and or 69.28. So no changes here on that. Let's go on and move into the euro yen. And we've been languishing lower, although we've kind of held our own for today. We had our buy chart resistance yesterday at 1924. We bottomed at, looks like 1922. So we're going to keep that in check. And resistance is going to be 2018. Yeah, that's fine, 2018. I mean, I was thinking maybe the euro could maybe make a little bit of a move as we go towards the close of the week, but who knows? The weakness that we've seen, it's been pervasive all week long. With that, let's go on and move into the euro odd. Well, with the weakness we saw in the Aussie, it certainly looks like the euro was able to go on and strengthen a bit here. And we did have a resistance 62.11. We've actually gotten beyond that. And we are looking for the odd to continue to weaken. So our bias chart resistance is going to be right there. You can see right, you see right here. That's going to be our initial resistance. And that's going to come in at 62.84. 62.84. That'll be the next line they'll go to. And we're looking for continued odd weakness. We had broken below this trend line right here, but things have turned around. Things have turned around with the poor Aussie employment data. Support now comes in right there on these lows, right there. You see that? To 61.48. 61. You can almost make the case it could even push it up even higher. I want to put it that close, but yeah, let's go with that right there, which is going to be 61.46. And with that, we'll go and move into the Euro Kiwi. Well, we took a dip here as the Kiwi did strengthen. Now kind of coming back into the, return to the mean, as they say. Resistance comes in right there. And we'll actually give it a little bit of room. So we're going to put it right there. 73.42. And looking at these levels right there. And just right here coming across. So it's got a nice little confluence here. So support's going to be 72.04. And let's go moving to the ASEAN. Well, things have really turned around here for the Aussie. You can see that really across all pairs. And we know that the yen itself has been strengthening. Let's go and move into the 2-hour chart. So the upside is going to be 74.02. And that might even be a stretch, but we'll go with that. And well, we did actually come right in here. You see that? And it actually held it here. So support now is going to come in right there. And well, maybe not for now, but we're looking for potentially for this market to go to, which is going to be 73.07. 73.07. I don't think we'll get there today, but if someone's looking to buy this thing, you got to know where your risk level is. Now with that, we'll go and move into the guppy. Or smack dab in the middle. I mean, this market is not going anywhere, at least for right now. So it's going to remain the same, 39.21 on the downside, 40.26 on the upside. So guppy's not going anywhere. And this used to be quite the flyer. And look at that, just quiet as can be. Look at some of the huge moves we saw in this pair. And look, we are just dead center. No movement. Like I said, this is some of the quietest trading I've seen ever. And I mean that as in ever. It's going to move into the sterling on. Well, we are making some headway here, obviously, with the weakness and odd. So right there, you can see that is going to be the next level coming up, which we're not even that far away, but that'll be today's bias chart resistance, which is going to be 90.60. Wow. You know, and I would have thought, bye-bye, that's the last we'll be seeing of the 190. And here we are, knocking on the door. But weakness and all certainly has opened the picture, allowed the door to be wide open for that. Support is going to be right there. Let's say we get the story to pair back. Support's going to be right there at 88.50. 88.50. Probably could even move it higher, but we'll allow, let's say, into next week, maybe we see some weakness Sterling doesn't seem likely at this point, but the weakness we've seen in the and that came almost made to 38%. So we're in a good situation to make a move higher, and we should see a break above 90 this next week. With that, let's go on and move into the other markets. Well, S&P's made it to another new high. And yesterday it looked like we were going to break lower. And that's what got the gold, which was an interesting day yesterday. I mentioned in the chat room earlier, I thought, okay, well, there's a good chance we're going to make it up to, 1473 on the D's futures, and even a little bit higher because the 38% came in at 1474.70. We actually came up to around 1469, looked like we we're going to hit some stops, and we faded like about $5 or something like that. Then the market turned around and rallied and makes it up to the 1475. We did back about, I think, $3 or $4, and then we turned around and make another run right when equities looked like they were going to fall down. And then obviously equities turned around and made that move higher as we closed to the end of the day. And even in the Asian session we went even higher. So that's where we stand. Obviously, gold taking a bit of a breather and a well-deserved breather. After we came off that 1446, that's a level we talked about the prior week and was a good area. Talked about key fib level there as well as support. We've seen a pretty decent rally off of that, and we came up to 38%. So I think the gold market right now is just marking time and a well-deserved rest as we paired back. I didn't really think about that when I was doing so much focus on the equities at the time. I actually traded a little bit of a Dow futures for the first time in years, just scalping around yesterday. That I didn't even think about that when we were going to, look like we're moving those highs. Was not a bad idea just to grab a gold short and just hang on for it, which is generally what I don't do. But considering we twice made a run up to the 38%, and I didn't even catch that last one when these futures made it up to, I think, 1475.50. I didn't even catch that, and I was kind of kicking myself. But that would not have been a bad move to just hang on. Especially, you can't look for equities to turn around and just sell off, and I didn't think we'd see that. Although I was a bit surprised we continued to push onto those new highs in Asia, but really has allowed gold to pair back, and gold has just taken a well-deserved correction, or at least a bit of a rest after making it to the 38% here at 1475. Crude oil is just trading a little bit quiet. I don't even trust this market. Like I said, I shorted some on Friday. I actually made a little bit, and then when I came in and short again, that's where I got stung. And really, and it wasn't bad, but I remember when I came in, it was actually a good level from a risk-reward point of view, but the market just kept on pushing and pushing, which reminded me what Blake was saying. You don't, short crude on a Friday, and we just didn't even come back. And then the market, like I said, they're now starting to ignore crude oil, which has been following the equities closely, has now looks like it's beginning to ignore these moves up in here in the equity market and not pay attention to it. As I did note that, I think it was on Wednesday or Thursday, it just seems like the market doesn't even know what it wants to do when it got up there. And we saw the market pair back. That was on Wednesday. So we saw the market pair back on Thursday after some data came out. And but we had spent the whole session from the close of Wednesday into Thursday very, very quiet. Asia throughout Europe, very, very quiet. So I think the market looks like it's susceptible. We talked about this market being vulnerable on Wednesday. So once we got up there, we just didn't know what we wanted to do, or at least the market didn't know what it wanted to do. Bunds continue to move higher, which you would think would be a little bit pressing on the euro, but it didn't help the euro when the bunds were going lower, i.e. higher rates. So what difference should it make at this point? Going back in here to the main screen, we're seeing the euro kind of slide back towards its lows. As I mentioned, this is the tightest range I've ever seen that wasn't holiday induced. As I mentioned, it looks like the range for the entire week has been essentially, 53 pips? I mean, it's just never seen anything like it before. We'll see how dollar CAD pairs out. Dollar yen just below that run up here at the 863. Gave it the benefit of the doubt if it does get to 876, only because end of the week and equities at all-time highs, but we'll see how we pair back. 98.11 is key, is a minor support and support here for the dollar index. If we break below that, the key would be that weekly level of 97.89. That's all we have. Good luck trading for the rest of the day, and we will see you in the chat room.